The recent market volatility has fueled a rise in riskier trades for retail investors. Kate Rooney has more on the big boom for zero-day options. Kate, I'm surprised by this because usually you see more interest when the market's going up, but it seems like it's just the volatility in general.
Yeah, absolutely, Leslie. A lot of intraday trading and hedging. So these short-dated options, as you mentioned, have seen this explosion in popularity lately. It is partially due to more hedging, traders wanting to take a more defined risk, but then they've also become widely available to retail investors who now make up the majority of action in what can be an extremely risky corner of the market. In April, JP Morgan noted about a 23% jump in 0 days to expiration options tied to the S&P. And so as the name suggests, these expire by the end of the session. They are designed to trade intraday moves. They are pretty volatile. It's an all or nothing trade, and they often expire worthless unless you time things perfectly. They are very risky, but they're also cheap, which is part of the lure for some investors. 5 years ago, same-day expirations made up about 17% of all options. It's now closer to 54% of the options market. Part of this is a wider availability on exchanges like CBOE, and then brokerage firms are also making these ubiquitous. Robinhood was the latest to roll these out earlier in the year. CBOE tells me roughly 60% of short-dated options volume is coming from individual traders. They say that is well above retail participation for other options, where it tends to be closer to 40%. Overall, the options market has been growing. Interactive on their earnings call last night saying they saw a record in quarterly options volume. And it's not all gambling. You might think that the way they're described, but investors do also use these to limit risk, add downside protection. And then the bond market is also one factor I'm hearing about. It's not been a reliable hedge lately, as you guys have been talking about. Options are now playing a bigger role in portfolio management, guys.
Kate, do we know, for example, at Robinhood, how important this has become to their sort of revenue stream?
It'll be interesting, David, to see on the earnings call. It's relatively new. If you look at overall options as a percentage, it kind of fluctuates quarter to quarter. It tends to be sort of in line with equities, but the prior quarter it was actually crypto that made up the majority. But options is steadily growing. They're also trying to capture this more sophisticated investor, but they're a little bit more profitable. They're making up a larger share. And if it's anything like Interactive with record options activity and what we're kind of seeing out there, I would expect it to be more meaningful, but it's a huge area of growth for some of the brokerage firms out there.
Kate, as the popularity of these increase, is it having any role or responsibility in some of the outsized moves we're seeing in the markets?
That has been called out, Leslie, as well. UBS was among those who sort of pointed to all of the volatility coming down to some of the options activity, especially these shorter dated options. So it's sort of a debate. UBS, as I mentioned, is on that side. CBOE saying it's actually more balanced. They're seeing sort of even ratio of puts and calls. But you even heard Bill Ackman say, part of the reason for all of this volatility, it's not sort of the normal market moving behavior. It is actually just all of the leverage built up in the system that you're seeing. So it's hinting at that, depending on who you ask.
Kate, thank you. Great stuff. Good way to understand the internals of the market right now. Kate Rooney.